Welcome. In this video, will Zbcn coin trend turn up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a closer look at the most recent candlestick formation on the chart, we see a particularly striking pattern, the doji candle. This unique candlestick formation appears during moments of uncertainty and indecision in the markets, and is often considered a precursor to significant reversal points. Doji candles signal a fierce battle between buyers and sellers, ultimately resulting in a balance where neither side gains the upper hand. This usually indicates that a strong directional change may be on the horizon. Especially when a doji forms at the end of a downtrend, it suggests that the selling pressure may be easing and prices could be poised to regain upward momentum. Currently, when we look at price action, the doji candlestick has formed in a highly strategic area on the chart. This significantly increases the technical relevance of the candle. Doji candles that form near critical support levels or long-term trend lines are strong signals that the price is trying to hold its ground and that buyers may be preparing to step in. This creates a positive outlook for investors and is often interpreted as the start of an upward move. To better understand the meaning of a doji candle, it helps to look at its anatomy. This candle has opening and closing prices that are very close to each other, and its body is nearly non-existent. However, its wicks show that the price moved both up and down during the session, only to return to the opening point by the close. This reflects market indecision and also signals that the current trend may be nearing its end. Particularly after a bearish phase, this kind of candle can be one of the first signs that sellers are losing strength and buyers are beginning to push for higher prices. With this context, it can be said that the observed doji candle strongly hints that the price may be about to reverse upward. The next few candles following the doji are critical for confirming this reversal. If strong-bodied green candles appear after the doji, it will boost investor confidence and confirm the start of a bullish move. As a result, the likelihood of the price beginning an uptrend increases significantly. In addition, the fact that this kind of doji has formed very close to a support zone may indicate that the price is forming a base and that an upward move is gaining traction. In technical analysis, these types of candlesticks are categorized as reversal patterns and are often used by investors as signals to enter positions. When these formations occur during a downtrend, they are usually seen as the first indication that the trend may be ending. Therefore, the appearance of a doji on the chart is often viewed as a potential opportunity zone by investors. From a market psychology perspective, this candle structure is also quite noteworthy. A doji candle suggests that those who have been selling are now hesitant, and that potential buyers are starting to gather strength. If strong green candles with high volume follow this pattern, it indicates that buyers have taken control, potentially leading to a new bullish trend. That's why, although doji candles may appear small in size, their impact can be significant and may mark the beginning of major price reversals. Technically, there are a few key details that should be monitored after this formation. First, is the doji candle forming near a support or psychological level? If it coincides with such levels, the reversal signal becomes even stronger. Second, volume analysis plays a critical role here. If the doji is formed with high volume, it indicates a serious shift in market sentiment. This means both sellers and buyers are placing importance on this level, making the signal more reliable for investors. But of course, we can't make decisions based solely on candlesticks, so let's take a look at other metrics as well. Stay tuned. When the chart is carefully examined, a supply zone position just above the current price, commonly referred to as a bearish order block, stands out. These areas are known in technical analysis as zones of concentrated liquidity, where institutional or professional investors previously placed significant sell orders. However, the presence of such zones doesn't always imply that the price will fall. On the contrary, testing and eventually breaking through these areas can be a highly positive sign that the price is preparing for a stronger upward move. The fact that the price is currently moving toward this order block is quite encouraging, as it indicates growing confidence among market participants and increasing buying pressure. Order blocks typically form in regions where large, sudden price changes have occurred and are closely monitored by traders. The fact that these areas previously triggered strong selling reactions suggests the price could face similar resistance upon retesting them. However, what's crucial is that these blocks not only act as resistance but can also represent thresholds where powerful breakouts occur. When the price reaches such a bearish order block, it may pause temporarily or experience minor pullbacks. But this does not mean the uptrend is ending. On the contrary, such short-term pauses and corrections are the building blocks of a healthy rally. In the current structure, The price approaching this bearish order block is a highly positive development. It indicates that the market has upward momentum and that the price is determined to test higher levels. A breakout here is typically interpreted in technical analysis as a resistance-turned-support scenario. That is, once the price breaks through this supply zone, it often begins to act as a support level. This shift opens the door for the price to move past a previously challenging area and push toward new highs. Working through such order blocks and testing them multiple times shows that the price is preparing for an upward move. Markets often test these critical areas more than once to build strength. If the price forms higher lows with each pullback during these tests, it signals that bullish expectations are strengthening and that buyers are becoming more aggressive each time. This increases confidence that the block will eventually be broken. Additionally, the price reaching this level shows that buyers have managed to push the market upward despite ongoing selling pressure. This highlights the strength of the underlying bullish momentum. If buyers remain firm and absorb the selling pressure, a breakout becomes inevitable. Moreover, such breakouts are often supported by strong volume, which can quickly propel the price to a higher level. This presents new buying opportunities for investors. This order block may also be considered a fresh zone, as the price hasn't spent much time here previously. Newly tested areas often provide only temporary resistance, and if market sentiment is positive, these zones don't act as lasting barriers. Especially during periods of strong uptrends, such blocks are frequently surpassed with high-volume breakouts. This opens the door to significant price increases and signals that psychological resistance levels are being cleared one by one. Another important point is evaluating any formations that may develop above such order blocks in technical analysis. For example, if a flag, triangle, or pennant pattern forms in this region, it can provide technical signals that the price may explode upward after a consolidation phase. These patterns also indicate that market participants are in a waiting mode but hold strong expectations for an upward move. The ATR, or Average True Range Indicator, which plays an important role in technical analysis, seems to be preparing for an upward trend again. This indicator provides a great advantage for those who want to analyze the dynamics of the market in depth, when most traders focus only on price direction. The main function of ATR is to measure how much an asset moves in a given time frame, that is, to analyze volatility. But it's not just an ordinary measure of volatility. It's also a signal that shows the energy level of price movements, opening the door to potential opportunities. Currently, the ATR indicator is showing an upward rebound from historical lows. This is a very positive development for market participants, as low ATR levels are usually indicative of tight and directionless movements, while a rebound in the ATR implies that the market is about to move again. Such rises are usually a harbinger of a big price move. That's because markets can't stay stuck for long. Just like a spring, the tighter it gets, the more strongly it opens, and this opening is observed in parallel with the rise in the ATR. ATR shows us volatility. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.